What the heck? There's like an elderly Japanese grandmother looking at my wife's garden in my backyard. But anyways, how's it going, everyone? My name is Amos, and I'm feeling a little bit better. You can't tell by my voice, my throat, absolutely sore, but hey, at least the headache is gone. At least the fever is gone. I just have a runny nose, the throat, itchiness, but we can work with that. In this video, I wanted to revisit my PayPal math because I did, in fact, read your feedback and your comments, and you guys told me about the PayPal share buyback program. I did some digging, and I looked into it, and after taking it to heart and playing around with the numbers, by the way, if you have no idea what I'm talking about, go and watch my previous video where I did a deep dive into PayPal, because this one is a follow-up. But circling back to the present tense, I just want to say this. I hate you guys, because you are, in fact, correct. And so through this video, I'm going to articulate my thoughts on how you guys helped me to change my mind. So what you see on your screen right now is from PayPal's Q4 2024 investor presentation. What you want to look at is the line item right here. PayPal's leadership team announces a $15 billion share repurchase program with no expiration date. They don't have to do it right now. They don't have to do it tomorrow. They can buy back the shares to their own discretion and whenever they please, whenever they feel like their share price is just way too low. However, what makes this even more crazy is that they still have $4.86 billion remaining from the share buybacks that they authorized in 2022. So it brings the total of share buybacks to just shy of $20 billion. And I did some digging around and I pulled it up in their 2022 10K. In June 2022, our board of directors authorized an additional stock repurchase program that provides for the repurchase of up to $15 billion of our common stock. So when you think about it, in the span of 3 years since they authorized this, they utilized about $10 billion to buy back the shares. But first, I think we need to pump the brakes because number one, the car is low on gas. And number two, you keep releasing your little fudge bubbles. It's disgusting. Just go to the bathroom. I'll park at Buc-ee's. By the way, if you ever visit the U.S., do in fact visit a Buc-ee's. If you're near Texas, Louisiana, anywhere in that southern area, go to a Buc-ee's. Dare I even say it's worth going out of your way to actually look at how crazy it is. It's like a tiny Walmart built into a gas station. But anyways, why is this important? So on your screen, I'm going to do a quick little teaching lesson. And by the way, if you can't tell, my veins right now, they're pumped full of Dayquil. That's why I feel cognizant enough to talk to you like this. Obviously, I can't project my voice, but whatever. So let's go ahead and assume that a company generates $100 of net income. The net income is also referred to as the bottom line because when you look at the income statement, it's the last line item after taking into account for all the overhead costs, the cost of paying your employees, the cost of paying for the facility rental, insurance, the utility bill, whatever. Whatever's left over is the profits, the bottom line, the earnings. They're all the exact same thing. And let's go ahead and assume that this company in question has 10 shares outstanding. So what is going to be the bottom line per share, otherwise known as the earnings per share? You're going to take the $100 of profits and divide it by the shares outstanding, which is going to give you what? $10 of profits per share. Now, this is why the PayPal share repurchase plan is a big catalyst going in their favor. Now, obviously, this is a very simplified version of what's happening in reality, but let's go ahead and assume that this company, this example, I guess for illustrative purposes, this company in question, I guess they make man bras for overweight men. That way we can support our ladies up here. And just like PayPal, let's go ahead and assume that their board of directors authorized them to buy back shares. And instead of 10 shares outstanding, because now they're buying back the shares that are outstanding in the stock market, they bought back 5, which means out of the original 10, now there's 5 shares outstanding. Now, how would that impact their profits per share? Because if you divide $100 of their net income and you divide it by 5 shares outstanding, then their earnings per share becomes, that's correct, young lady, it's going to be $20. And I want you to keep this man brawl example in mind because now we're going to jump on over to my EPS forecast model. And as of right now, at the time of making this video, PayPal's current trading multiple, also referred to as the price to earnings ratio, the PE ratio, is just shy of a 15. Now, when you buy back the shares, it artificially boosts the EPS as we just learned, which means all else being equal, that's going to drop their PE ratio. So instead of a 15, hypothetically, it would decrease to like a 12 or 11. Now, realistically, should PayPal trade for 11 or a 12 PE ratio? Probably not, right? And so their stock price is going to go up in order to match that 15 PE ratio that it was previously. Now, keeping all of that in mind, I revised the numbers for the projected EPS going forward. I still think for this year, we should stick to what they are saying of $5.05 as their bottom line per share. With a projected PE ratio of 15, I still stand that by the end of 2025, so 3 more months, I think PayPal's fair valuation going to be $75. Now, if the markets do turn in the favor of PayPal and they feel bullish about them and they go up to like a 25 or a 28 PE ratio, like you see right there, then realistically they could be $141. Now, do I see that happening statistically and probability-wise? No. I think somewhere in between is the most likely scenario. I want you to pay close attention because previously I forecasted that their EPS was only going to increase by 2.4% year over year. However, now I have it at 8%, and then the following year, 11%, and so forth. And that's because I baked in about 5% of the EPS growth being attributed towards the share buybacks. And you might be like, wait, hold on, Amos, only 5%? Why is that? Because when you think about it and you look at their past timeline and history and the behavior of their leadership in terms of how they buy back the shares, in 2022, they also authorized $15 billion of share buybacks. And going into 2025, they had just shy of $5 billion left from the 2022 number, which means they don't use all of the $15 billion in one calendar year, nor do they like using it all in general. They like having some gunpowder in the reserve. So even though as of right now, in 2025, they also authorized an additional $15 billion, I don't think they're going to use all of it right now. Instead, predicated upon their past behavior and going off the assumption that the leadership team will buy back about $3 to $3.5 billion of stock each year, then realistically, about 40 to 45 million shares will be taken off the market each year. Because believe it or not, buying back 40 to 45 million shares each year, that's going to have a drastic effect on their shares outstanding. And right now they have a little over 1 billion shares outstanding, and to buy back about 4 to 5% every year, that's going to be huge for their EPS. So jumping on back over to the EPS forecast, if they do in fact post $5.45 the next year, then realistically, I think PayPal should finish the year at $81.81. And if their EPS increases by 11%, of which 5% is attributed towards the share buybacks, then $90.81 not out of the question. And then in 2028, roughly 3 years from now, I think PayPal should be a $100 stock again. And remember, this is based on the assumption that the market will continue to feel disgusted, to feel repulsed towards PayPal and their trading multiple being 15. However, historically, their trading multiple and PE is what you see on the right side, this column right here, 28. Usually, their PE should be a 28. Now, do I see that happening anytime soon for the markets to feel bullish about PayPal again? Probably not. But to be at a 15, to be priced exactly the same as these very mature, established companies with practically no growth baked in, I disagree with that as well. I feel like if the S&P 500, the average PE is above 30, I think it's like a 30.7 right now, for PayPal to be at a 15, I think that's ridiculous. I fundamentally disagree. I think their trading multiple should be closer to like a 20 or a 21 at a minimum. And even at a 28, that's still a slap to the face. But I think it makes sense because their revenue, their gross sales, it has been slowing down by a significant amount. I think their growth story, their Cinderella tale in 2020 and 2021, it came to a halting stop, and the numbers have just been kind of modest year over year. But to be at a 15 PE ratio, I disagree. But between you and me, now please don't get angry at me, but I feel like PayPal, they're not exactly being wise with their utilization of their capital because In lieu of share buybacks, I wish that PayPal would allocate more of that money towards buying out a new fintech company that's just disrupting the industry, or rolling out new features, or making PayPal a digital bank. I talked about it previously. If they copy the playbook of SoFi, I feel like PayPal could be a phoenix rising from the ashes. But instead, they're choosing to buy back shares. Now, obviously, that's a good way to reward the shareholders, but their business operations, it's still kind of stagnant. And I say all of that with concern because, honestly, their leadership team, especially their product managers in charge of all the various features and functions of PayPal, they can't be satisfied with their economic moat eroding away right now. Big tech is eating their lunch. They're doing the exact same thing that PayPal can do, but it's more integrated into their ecosystems. And so even though you might disagree with me and you applaud PayPal for using $15 billion to buy back shares, I still stand on this tiny little hill that you see on my desk that money could be better utilized for R&D purposes, in my opinion, or to initiate a dividend payment. But to just buy back the shares, Here, as a matter of fact, let's look at it. So another very mature, established financial company that PayPal really reminds me of is Western Union. Western Union's in the business of transferring cash money from point A to point B. Now, if you take a look at Western Union's shares outstanding situation, for the past 10 years, they've been aggressively buying back their shares. PayPal is copying them play by play. 2015, Western Union had 516 million shares outstanding. Year over year, they just keep buying back the shares. Now, there's 337 million shares outstanding. Now, you would think by buying back the shares and artificially boosting their EPS and all of their other metrics, that their share price would follow suit and go to the sky, right? That's the investing catalyst thesis for PayPal right now. But if we just take a look at Western Union for the past 1 year, negative 34%. Past 5 years, negative 63%. So even though Western Union is aggressively buying back the shares, in the past 5 years, they're still down 63%. But it is worth calling out. The difference between Western Union and PayPal, take a look at their gross sale. Their revenue has been stagnant from 2015 to 2018 and then has just been steadily declining year over year. It's just dropping every single fiscal year. That's really, really bad. Whereas on the other hand, if we pull up PayPal, the difference is that their revenue, their top line, is only growing year over year. And friends and family, a business cannot be fundamentally dying if their gross sales keeps going up year over year. Now, obviously, they're not posting the same numbers like they did in 2020 of like increasing it by like 20.7% year over year. Now it's only going up by 4%. And that's because previously I said it. I think PayPal's market penetration is saturated. So the growth in their revenue, it makes sense of why it's slowing down. But something else that you want to keep in mind is I started to look at their shares outstanding situation a little closer. And ever since 2015, PayPal has been aggressively buying back their shares. So what you're seeing is that the amount of shares outstanding is decreasing year over year. This isn't something new. Buying back the shares isn't something they just decided to do in 2025 or in 2022. As you can see, in 2018, there was 1.2 billion, and then it just keeps dropping every single year. Now it's just above a billion shares outstanding. And you would think by buying back the shares like that, it would have a drastic impact on their share price, right? Especially, let's just look at from 2022 to right now. I decided to pull it up on Google Charts so that I can do this feature right here. You would think by buying back the shares, their share price should go up. But did that happen? As you can see on your screen right now, as we zoom forward to the present tense, ever since they started buying back a crap ton of shares on an aggressive pace, it's still down 4.4%. So for me, that is a little concerning. So even though they have been buying back the shares at an astronomical rate, it's not really helping their cause with their share price. So the fact that their gross sales is only increasing by 4%, it makes me hesitate and feel a little cautious that is it really going to make that much of an impact on their share price? But once again, if we take a look at PayPal's bottom line per share, it has been increasing year over year since that 2022, which by the way, decreased 40.6%. That's a big drastic drop. That's pretty hideous and ugly. But since then, it's been going in the right direction, up and to the right. So that's what makes them very different from Western Union. Whereas their numbers are just shrinking and declining and the fundamentals are looking worse and worse, PayPal's, it's getting better. Their balance sheet is getting optimized. So that's how they're different. So even though Western Union is buying back their shares and their share price is getting crushed, and the same thing is happening with PayPal, I think the hope that I have with them is that their metrics and their numbers are improving. So I'm kind of confused as to why the market is pricing PayPal with a forward PE ratio of a 12.9. It's almost like I think the markets have it wrong with this one. So having said all of that, here's my updated game plan. I'm no longer going to just sit on the sidelines and watch them like the creep that I am. As a matter of fact, I curse you. Shame on you, because you guys did influence me. After taking a look at their share buyback program, I will most likely make the decision to buy a handful of shares of PayPal at their next dip or correction. Now, obviously, right now, they're flirting with that $70 a share territory, and one might make the assumption that it might be too late, but remember my EPS forecast, I think $75 for them, that's the worst case scenario, a very bare situation. Because for me, based on their fundamentals and numbers, I truly don't think that PayPal is a $75 a share company. And as a matter of fact, I'm going to be increasing their price forecast to $93 a share. I think that's what PayPal should be, at least in the next 365 days. And that's with their PE jumping back up to like a 17 or an 18. And that's because as of right now, believe it or not, there is bearish sentiment surrounding the company. However, if for whatever reason the narrative changes and it flips and they go back to having a trading multiple of like a 25 or 28, then obviously the price forecast goes a lot higher. But for me, realistically, PayPal right now, $69, $70 a share. They should be $93. So I think that upside for me is enough to want to jump in at the right price. And that right price for me, I'm not telling anyone what to do with your money. What I'm probably going to do is, if they do in fact pull back and they drop back to like 64, 63 bucks, I'm jumping in. And I'm not saying I'm going everything into them, okay? Only a little bit. Because the upside from $64 a share to roughly 91, 92, 93 bucks, which is their inherent worth as a company, I like that upside. Now, if I can't buy into them and PayPal continues to trade flat at 69 or 70 bucks, I'm not going to be upset. It's not the end of the world. Like PayPal on my priority list right now, they're at the bottom. There's at least 30 to 40 companies ahead of them that I am willing to buy before I want to buy PayPal. And it pains me to say, because this strategy that I just outlined that I'm personally going to be doing, it goes against my investing style. Because usually when I think about buying into a potential investment, I think about my timeline horizon as like 10, 20, 30 years. Because I'm in my mid-30s. I have time on my side. But for PayPal, it's not going to be a long-term investment because I don't feel bullish about their future based on their current operations. But if they do in fact make that pivot and transition into becoming a digital bank like SoFi, or their M&A team swallows up a very promising and bright fintech company, then obviously my opinion will change. But based on who they are right now, I'm not too bullish on the company 10, 20, 30 years from now. But for the next 1 year, not a problem. I can buy in, sell at a profit, and jump out. Not a problem. So PayPal for me is going to be a short-term rebound rally or correction in their stock price to the upside. That's it. I don't plan on buying and holding. I just don't see PayPal compounding from their own current operations. Because think about it like this. Through the share buyback program, they're making themselves look more attractive on paper, but that still does not make me optimistic of their future. Does that make sense? Because instead of improving their net income through their operations, through the financial engineering, the manipulation of buying back the shares and whatnot, that's artificially boosting the EPS, which is one methodology of improving your bottom line, but the point still stands. If they were increasing their gross sales while reducing their overhead costs and improving their margins, and that's why their net income per share was improving, then I would feel bullish. Then I'd be like, dude, this one right here, I like. But it's through financial engineering of buying back the shares. So in the short term, I suppose I like what I see. In the long term, not so much. So it doesn't make sense for me to buy and hold. And who knows if there's ever going to be a crazy event that makes e-commerce sales go through the roof again. I remember in 2020 and 2021, everybody was buying stuff online because we couldn't go into the physical retail stores. So PayPal became this unicorn, beautiful company, and I think they were about $300 a share. But ever since life went back to normal and our shopping habits as consumers are now back to normal, we're pretty much split of buying stuff in person and buying stuff online. It's no longer 100% online. So I guess it's a really long-winded way of saying I think they're undervalued and I'm willing to buy them now. But I will say this, all else being equal, I would rather double down on my Salesforce position because I also think they're undervalued right now. So it really depends on who's more undervalued at the time that I decide to pull the trigger and dollar cost average. Anyways, before I sign out of here, by the way, my voice isn't always this raspy. I gotta take some cough drops after I finish filming, but I wanted to give a shout out, recognition, and publicly praise Soul Search for contributing to the baby diaper fund on the Amazon baby registry. I honestly cannot thank you enough, and I mean it from the bottom of my heart, because my wife has quite a few friends and family members that have been donating to the baby registry, but on my end, dude, I don't have any friends. I know I talk about it a lot, and I'm not even ashamed or embarrassed to say it. I used to have a lot of friends, but for one reason or another, I became very isolated in my adulthood, and I don't have personal social media, so nobody was contributing to our baby registry from my side of the house. So I felt really sad, but you guys are pulling through. So thank you so much. Because I feel like I felt so guilty, right? My wife's doing all of the heavy lifting. She's carrying the baby, and everyone who's helping us out is from her friends and family. And because I don't have anyone, I felt super guilty, but you guys have been pulling through, so I feel less shameful and I feel really grateful. And you guys remind me that you are in fact my friends. So I have to stop saying I don't have friends, because the YouTube community, you guys are my friends. So I'm like, yeah, dude. But anyways, if you made it to this point in the video, I love you. Stay safe. Good luck in the stock market, and I'll talk to you next time. Hopefully the next time I see you, the sore throat problem will be less. We'll see.